Thank you, Mr. Chairman, and Undersecretary Liang, thank you for appearing here today. I want to follow on the line of questioning that Senator Haggerty had begun a few minutes ago and ask about the recommendation in the President's Working Group report on stablecoin issuers that it should only be limited to insured depository institutions. With respect to the insurance requirement, is it the case that the FDIC and NCUA have found that stablecoins and their assets are insurable? And have these agencies committed to provide deposit insurance to newly chartered de novo institutions that issue a stablecoin?
So thank you for that question, Senator Lummis. The proposal for stablecoin issuers to be insured depository institutions, given the flexibility of that supervisory and regulatory regime, does not necessarily mean that stablecoins need deposit insurance. I think that would depend on the circumstances of the backing and the functionality of the stablecoin that is being provided. So the proposal is not, and the PWG did not recommend necessarily that stablecoins be backed by deposit insurance.
And what other types of backings would you believe adequately protects the consumer?
So I think the consumers can be protected with reserve assets that are truly high quality, that will provide some, reduce the risk of runs by investors. There's also the protections provided by oversight of all the entities that go into providing, supporting stablecoin as a payment. So the custodial wallets, the custody, the other ways of liquidation of the redemption of the stablecoin that can be provided. So I think all those go into protecting consumers when they want to use stablecoin for payments.
So since there are alternative ways of bringing stablecoins inside the banking perimeter, like 100% reserve bank with tailored holding company supervision, is that something you discussed and are willing to consider?
Yes, I think bringing stablecoins into an IDI framework that is adjusted for the risks of the stablecoin issuer, which would include solid backing of the stablecoin, one for one, would certainly be an option.
Well, I'm so pleased to hear that that's your approach, because without it, I think the type of competition that Senator Haggerty wants to protect would be at risk if someone already has deposit insurance and can issue a stable coin like, JP Morgan's JPM coin. That would seem to limit competition in that marketplace to only the very, very largest banks in our country. And there may be other options that other institutions could explore. And it sounds like you are willing to discuss that with them. So I'm going to conclude with a different question. Does Treasury have a timeline for issuance of the guidance on the definition of broker for digital assets under the infrastructure bill? I know we were promised some public guidance on this a few months ago, and we have yet to see it.
I know Treasury is working very actively on that. The principle of the tax provisions is for those who owe taxes should pay their taxes. It is not designed to crimp the activities of crypto assets.
Well, I'm also very pleased to hear that, because some of the provisions in the definition, as you know, included people who wouldn't know the ultimate customer of a digital asset, the ultimate customer being the one who owes the taxes, as opposed to the inventor of the software or the hardware. So thanks very much. We look forward to that guidance coming out as soon as possible, and appreciate again your testimony today. Mr. Chairman, I yield back.